Good afternoon, everyone. In today's video, we're going to talk about both the futures and stock volatility box trades that's set up for today, May 19th, 2020. It may be a little bit of a longer video, so if you'd like to use the timestamps, feel free to do so to bounce between the futures and the stock trades. So with our futures markets, we had only one trade that's set up via our volatility box rules, and that was in copper where we had our breach. We had an opportunity to enter once we had our confirmation signal, and it was good for our first target for a positive 175, and the second contract was taken off at break even. So that was the one trade that met the rules. Now there were several other places where you had breaches that led you to some really nice trades, such as the one in natural gas. This wasn't a valid trade per the volatility box rules since you had already hit the first target before you had an opportunity to re-enter. But even that second bounce acted as support, giving you a really nice opportunity to get long. So we'll talk about that trade as well. And then finally, for the indice traders only, we had an opportunity where price fell perfectly into the volatility box, but this was towards the edge of an hour. And so using the volatility box rules, for us, that's a time to sit back, observe, and see whether or not our models are respected. It's almost free opportunity without needing capital at risk. But if you did happen to take this trade, you had the benefit of a really nice V-shaped reversal exactly from the volatility box lines. So we'll share that as well. Now for our stock volatility box trades, we had 7 that set up today, or 7 at least that I was able to take advantage of from the live scanner tab that fit our rules, right? And the rules are, again, it hits our scanner tab, we get an opportunity to see the edge signal, and then that's our opportunity to enter at our volatility box prices or better. And we had an opportunity to do so in Baidu, which was a nice winner off of our conservative long. So that was 90 cents per share. And you can size that based off of your account size, but I've tried to break it down on a per share basis for that most fairest comparison. We also had 2 trades rather in China Mobile. The first one was an aggressive long, which did not work out. That was a loss of 19 cents per share. But the second one did work out, which was an opportunity to again try using the conservative models, where our first target was a little bit less. So it was still a little bit lower, but you'll see that China Mobile ended up making a nice move up from the conservative levels. Also had a trade in Penn Gaming, which worked out along with Thor Industries. And so at this point, it was a nice win streak of 3. Probably should have stopped there, but I did take 2 more trades that set up into the close just because they looked pretty good and they still met the volatility box rules. One was in Pinduoduo, which was at 11:30. So you can see that both of these happened towards the edge of the day. But that was an opportunity to try and get long off of our aggressive models, which was a loss of 57 cents per share. And then finally, one was in Walmart, which to me was an opportunity to buy on an otherwise uptrend. Did not end up working out. And so that was a loss of minus $1.01. But Walmart did start to make a move in our direction before price reversed with that final puke down lower into the close. So we'll cover all of those trades. So a lot to cover, but I think it'll be a good episode. All right, so starting with our trade in copper, so the one that actually triggered. So we had copper open in the 5 to 6 a.m. Pacific hour, and using our aggressive volatility box, we can see that copper didn't breach either side's aggressive volatility box entry lines. That was our permission to continue to use the aggressive models. So at this point, we're looking for breaches of either side's aggressive volatility box lines, along with an edge signal, which then gives you the confirmation to enter into the trade. That one breach came with our open, that 6 to 7 a.m. Pacific hour open, when we had price breach our volatility box, actually this candle right here. We then had an edge signal confirmation along with an opportunity to enter at the cyan line or better. And we ended up making a move in the opposite direction of the first target, which is the same direction risked on the opposite side, a little bit outside of the volatility box here. So technically, your first target may have a skewed risk to reward ratio. And then that second target has a stop of break even with a target at the other side's target line, which we fell just a few ticks shy of here. You can see that copper made a nice move up higher, but at this point, the stop's at break even, which was taken out before we ended up hitting that target. And so that was one opportunity in which probably trailing a stop was a much smarter move than just leaving it at break even. But of course, we all have perfect vision in hindsight. But that is something for those of you that are looking at trailing that second target. That is a concept that I've talked about, which I think does make sense, trailing it using pivot points as we continue to make a move up higher, especially when we are seeing some of these violent reversals. Now, I'll quickly go through the indice charts. So the S&P, we had the trigger happen at the edge of that 11 to 12 p.m. hour before you started the final hour of the market. in which you had a really nice reversal from that bounce point, right? That happened all within a few minutes, and you equally had that violent move in the opposite direction. So I'm not sure how many of you were even able to catch this because it was mostly a wick, but if anything, that should help you build confidence in the models, and we can see that at least into the close, we slammed once again into the aggressive volatility box lines. So it wouldn't be all that surprising if into that 3 p.m. open and onwards, we start to chop around sideways and then make a move up higher. Now, if we go through in the NASDAQ as well, you'll see the same exact pattern, right? That bounce from that cyan line, and same thing in terms of what that open may look like. The Dow, same exact thing. And then finally, the Russell we'll see should have a little bit more volatility, in which price even broke outside of that volatility box in the final hour, where in the case of the Russell, I think you have to start to adapt to the doomsday models in order to find places in which you expect the Russell to start to have at least some sort of a reaction, right? But now really you'd be looking, if these models were to hold up, for price to bounce from these cyan lines before you end up breaking outside of these clouds. Now, in the case of natural gas, the trade set up when price fell perfectly into the volatility box one more time, right? So you see price hit our cyan line. You then get the edge signal confirmation, and we're looking for this retest before price makes a move in the opposite direction of what is our distance from the cyan line to the exterior of our clouds, which in this case was 17 natural gas ticks, but we did end up making that move in this burst up higher before we had that retest. Now that retest, of course, did end up working out, but per our volatility box rules, this was not a valid trade. But it still did end up working out for a really nice reversal for those of you that do trade natural gas. Now moving on to some of the stocks. All right, so starting with Baidu, we had Baidu first hit our live triggers page, which is our scanner, when it first breached our volatility box at this point. And so that's when it came on our list live during the market hours, where you had an opportunity to enter Baidu once we had our edge signal confirmation, which came right here. And then you had an opportunity to enter at the clouds or better. And so my entry was exactly at the clouds. I wasn't trying to gamble or get a better price at this moment. As soon as we got an opportunity to re-enter in this next candle, that's where I got filled. And then we were looking for a move to the target line right here. And so the target was at the target line. Stop is outside of the volatility box, outside of even that 112 area, but above the 111.50 zone. And that was it. That was the trade we were looking for to see which direction does Baidu make a move in. And so if we fast forward to price action, you can see that Baidu did end up hitting our target before we ultimately came back down lower. And this is where the retests aren't valid, but if we continue to zoom out to see what actually ends up happening to Baidu, we have that second bounce with the follow through before ultimately puking down lower, and now we closed well outside of even our aggressive volatility box. And so that's why the retests aren't necessarily the favorite one, same with that natural gas theme, but you can see that sometimes that second retest does work, but it's really the third time where we oftentimes see that price action starts to break well outside of the volatility box. So that's just a little observation for those of you that are looking to trade with these levels. Moving down the charts, in China Mobile, we had two separate opportunities to enter, right? So that first one was once we hit our aggressive volatility box, which is this first set of models that we have plotted here. We hit our models, we had the edge signal, and that's where we were looking for that same sort of move, a direction to the target line or a stop outside of the volatility box, which in that aggressive models case, we did end up getting stopped out, and that too with 3 squeeze signals plotting. So take that as you will. Our second opportunity then came as price hit our conservative models. So once again, we were waiting for a breach, which came on. And again, we were notified on our live scanner page. You had an opportunity to enter once we had the edge signals at the clouds or better. And this time we did end up making a move to our target. Now, the second batch of contracts were again taken off at break even, but a nice stretch target here would have been something like our aggressive models target lines and looking for that really nice move up higher from that conservative range, right? So that's where it's worth risking a break even stop to see if you can get that really nice home run sort of winner. Next, we had our trade in Penn Gaming where price again hit our aggressive volatility box at this point. We then had our edge signal plot almost towards the edge of our actual clouds. So at this point, you're able to minimize your risk drastically, right? Instead of the normal risk where our entries at the volatility box clouds, where you're typically looking at risking around 2.38%, you're now able to risk much, much less. It's about 17, 18 cents, and you could have given it a little bit more room as well with that better entry. Now the target stays exactly the same, right? It's the same target line. And this just gives you a much better risk to reward ratio, which you did end up actually getting in this case. And so that's where Penn becomes a really nice winner. And for those of you that are a little bit more conservative as well, this is a pattern that another member found, but it's layering on even the market pulse, where you're waiting for the market pulse to start to turn into a deceleration zone. and then get a retest one more time at the clouds or better before that final puke down lower. So now, unfortunately, the second batch of contracts is again taken off at break even when you have this retest and retest here before this ultimate puke down lower. So this is something that we're now trying to figure out, okay, how do we start to become part of this move as well? But it's that first target which was the winner in today's case, not the runner, as the runner was taken out with all of these break-even stop touches. Next, we also had a trade in Thor Industries, and this was an opportunity to get short. So again, price hits our volatility box, notified on the live scanner. We have our edge signal. In fact, you had multiple plot here while price is still continuing to make a move up higher before you did ultimately get that reversal. So it's really after this first signal that the entry is valid, and at that point, it's the clouds are better. And so our entry was still at the clouds, had a little bit of heat on this trade before price ultimately ended up reversing and still hitting the gray target line that we have. And now in the case of Thor, it's the second batch of contracts here that became the really nice winners, which is not captured on the P&L table, mostly because this is one of those where you get to decide how you want to close it, right? For us, the second target that makes sense is really a break-even stop, and then looking for a move of the other side's gray target line with really a close towards the end of the day, but so often than not, that ends up costing you more money than not. So I'm not sure that that's yet the best idea for the stretch targets versus trailing your stops down lower. But in the case of today, from our entry point, you can see that Thor ended up falling a max total of right around 4-ish%, 3.95%. And so that was a really nice winner if you were able to milk a good percentage of that move. Our bare minimum first target on that trade was 0.76%. Which is still a nice move for as quick as it happened, but not nearly as nice of a move as that 4%. Right? And so that's where I think really giving that second batch of shares, contracts, whatever you're looking to trade some room starts to work in your favor. Next, we had our stop in PDD, and this is where, again, the same sort of pattern this time it didn't work out, right? So it's where price hits our volatility box. We have our edge signal, opportunity to enter at the clouds are better, so immediately this next candle is the opportunity to get in. And that's where we were looking for a move to the gray target line or our stop outside of the volatility box, which in this case, you can see that there was really no follow through at all. It was just one of those grand opening, grand closing trades in which prices continued to start selling off lower and lower before we were stopped out at this moment outside of our volatility box clouds. And again, here, this wasn't one of those trick trades, right, where it was just a little bit of a breach outside. It was once you breached outside of the volatility box clouds, price continued to sell off lower. So getting out, taking your losses, and really just admitting that this trade didn't work out and moving on to the next was the smartest move versus what we see sometimes, which is price continues down a little bit lower before ultimately having a violent V-shaped reversal one more time, especially with the current volatility. So it's nice to see that, at least with this loss. It was a nice loser if there is such a thing. And then finally, it was a trade in Walmart that we had. And in Walmart, we had an opportunity to again get long. Once we had price hit our volatility box clouds, we had an edge signal, opportunity to enter at the clouds or better. And then you can see we had a good amount of heat on this trade, came back to break even. And this is where I thought that, okay, we're now starting to make our move up higher. We even had the market pulse start to turn into acceleration mode before we had that puke into the close, where our stop was taken out in the final few minutes before the market closed with this breach outside of the volatility box. And so that was an unfortunate trade. The only few things that stand out here, just in case we were trying to say what gives us signs that trying to pick this fade was a bad idea, we did have several squeeze signals telling us that we should expect bearish action, although we have seen price reverse from that. Really, I'm not sure that there was a way to avoid this outside of maybe the time parameters, but those are the few things that do stand out. All right, so I hope this detailed walkthrough of both futures and stock helps give all the new members an idea of some of the trades that's set up for today, how to look at each of these markets, how to use the signals in tandem with one another, and really start to use both platforms to work for you, right? With the Volatility Box futures, we have the dashboard, which tells you wherever you have breaches on all four models. And with our Stock Volatility Box, we have the live scanner, which tells you, again, where's price breaching at this moment. So in both cases, you only need one screen open to be able to know exactly where price is breaching and where there's opportunities setting up. All right, hope this video helped, and we'll see you in the next update. Take care, everyone, and good luck trading.